batten down your hatches, hold on to your gold and silver, hold on to your tangibles, because the crack-up boom is just around the corner, in my opinion. Tuesday, March 19th, 2024, Maneco 64, home of alternative economics and contrarian views. We're going to look at why the central bankers have no intention of reining in easy money. And they can't, of course, if you've been listening to me for all these years, in this fiat currency debt-based system. It's something that is impossible to do, and that's why we're going to get a crack-up boom. And this is what gold is telling us by breaking out to new highs in all major currencies, the dollar included, for a change. Before I go any further, I just want to thank all the new subscribers, all the existing subscribers, and ask you, if you haven't subscribed yet, to subscribe to the channel, to make sure, if you enjoy my videos, to hit the like button, and also make sure to hit the little notification bell. I make videos every day. And again, thank you. So before we go into the central banking situation, just wanted to talk a little bit about what happened in Russia recently. President Putin won a landslide presidential election, yes, in the West. The talk is that it's a sham election, that he stole the election, while countries like India and Saudi Arabia have actually come out. The president of India and Mohammed bin Salman have congratulated President Trump on the election win. What do I think? Well, I think he's very popular, and he's a wartime president. And I think the West is worried because he's going to get another 6 years, and their provocation of Russia to start this conflict well, the conflict really started in 2014, but to really up the ante in 2022, that strategy to have regime change in Russia has failed. And this is the end of the West, in my opinion, as an influential, well, force that has been around for over 200 years. And that's what gold is telling us. That's what the collapsing currencies are telling us. So that's how I see it, the Putin victory. And just wanted to let you know, because you might not have heard of this in the United States, seeing how the mainstream media works, but the man behind the Biden throne, so to speak, visited number 10 Downing Street yesterday. Yes, there you go. Barack Obama holds informal talks with Rishi Sunak at number 10. So what's going on? Well, apparently it's nothing really. He came to London to promote his tax-free foundation. The Obama Foundation is probably laundering some money from the Ukraine, right, offshore. And he's just talking about artificial intelligence with Prime Minister Sunak. So just wanted to put that out there for you. So back to the main topic here of central banks. And before we look at what the BOJ did today, and it's a bit of a joke, not surprisingly, just want to read what Ludwig von Mises wrote on page 428 of his magnus opus, Human Action. The crack-up boom. Are we there yet? And I've spoken about this many times. And you might say, well, one day it will happen. Yes, it will. And someone might say, you're a broken record. I don't think so, because very few people see this coming. If you ask anyone in mainstream economic academia or mainstream economists on Wall Street, City of London, they'll say you're crazy, but it's coming. And we're very near there. And when it starts, it's like a thief in the night, so to speak. It happens very quickly. And if you're not prepared outside the system, you have too much fiat currency reserves, unfortunately, they will be wiped out. So, but then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. The crack-a-boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper, scrap digital entries. That's what I wrote there. Nobody wants to give anything away against them. It was this that happened with the continental currency in America in 1781, with the French mandat territoriaux in 1796, with the German mark in 1923. And here's the important part, the interesting part. It will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. Excuse me, just have to have a sip of my coffee. So I think we're very near when the masses wake up. We're not there yet. And having read about the German hyperinflation in When Money Dies by Adam Ferguson, and the events that happened in revolutionary France, having read Fiat Money Inflation in France by Andrew Dixon White, one of the characteristics of this process of the masses waking up is rising food prices. That's always what gets the powers that be. And some of you will, of course, say, well, they want to bring in the CBDC, so they have to do a controlled demolition, a demolition of the current fiat currency system. But I don't think it will work, because in France, before the mandat territoriaux, they had the assignats. The assignats, they were in circulation from around 1791 to 1796. And the mandat territoriaux were supposed to replace them because they'd been hyperinflated out of existence. But even before they issued the mandats, they became worthless before even being issued. So people didn't buy into it. Napoleon had to put France back on a specie sound money system. Specie means gold and silver coinage. And I think that's what's going to happen again. So back to why I think the central bankers are still inflating the system. And you might think, what are you talking about? Rates have risen so high. Well, if they were really reining in monetary largesse, gold wouldn't be making new highs in all major currencies. And I think they get away with it, but investors are waking up to the fact that a lot of these inflation, or what they call inflation, but are really price indices, they are doctored. They're much higher. So investors are really getting negative return on their currency, on their savings. And yes, the Bank of Japan, the mainstream media will lead you to believe that everything's changed for the Bank of Japan. This is the FT, of course. The FT, who had this editorial 20 years ago, and I'm going to talk about it in a few weeks. It's the 20th anniversary. The FT that believes gold is pointless, right? They're telling us that Japan ends era of negative interest rates. Central bank becomes world's last to unwind ultra loose monetary policy after signs of lasting end to decades of deflation. I'm going to dissect this comment here because it's full of inaccuracies, or you might even want to call it misinformation. First of all, the Bank of Japan, they raised rates from minus 0.1 to 0, a target of 0 to 0.1. So that's still ultra loose in my book, with CPI running around 3%, which is probably more like 5 or 6, right? Policy. And we haven't had decades of deflation in Japan because, as you saw yesterday from my video, Japanese M2 has never gone down since 1960. It's always going up, and that's what inflation is. But they want the public to believe that negative CPI is deflation, and it's anything but. It's just falling prices. Did you know that the Bank of Japan, yes, they've stopped the yield curve control for the 10-year yield, JGB. But guess what? They're still going to buy $40 billion, not yen, $40 billion of government bonds a month, QE. So the FT is trying to fool people. Yeah, and they try to fool people about a lot of other things that are not to do with economics, right? And you know about that. You have to think, for example, January 6th. That's another example where they try to fool you into believing something else. And this 40 billion, I did some calculations. It's the equivalent of the US doing about $250 billion in QE a month. So Japan again has come to the rescue. And what do I mean by that? Well, they're rescuing the Western currencies, the dollar, the pound, the euro. They've had to kind of tweak it to make it seem like they're not. And the same thing goes for our central banks, the Fed, Bank of England, ECB. They're still ultra loose. And that's why longer term yields are starting to creep up, because investors don't see them reining in the liquidity or inflation. And that's what it's all about. And today, as you can see here, gold is making a new high, or the yen is falling to new lows versus gold, real money. We're at 324,000 yen almost. So, and that's the way all other major fiat currencies, all fiat currencies for that matter, that's the way they're going to go. And that's why the BRICS countries, or the global south, and even countries like the Czech Republic and Poland are continuing to load up on gold, because you're going to have gold because that's the only thing with silver, of course, that survives monetarily in a hyperinflation or a currency collapse. So there you go. Let's quickly look at the markets now. It's 7:45 a.m. London time. I'm doing these earlier right now because the US clocks have gone forward. Hours only go forward at the end of March. So yeah, gold has come off slightly here. 21.55, down $5. High's been 21.63. Low has been 21.54. Yeah, silver is taking a bit of a breather. I'm not concerned. We're trading just below 25. Low's been 86. High's been 25.17. Stock market, not doing much really. The NASDAQ is down 0.25%. Apart from that, everything's really quiet. And you would have thought if the Bank of Japan would have ended decades of ultra-loose monetary policy, that the yen would be up. But maybe it's a little bit of buy the rumor, sell the fact. But anyway, the dollar is up 0.75% versus the yen, and it's back above 150. So much for that tight monetary policy by the Bank of Japan, right? Well, Commodities, I think in general, not just gold and silver, they're pointing to more inflation, more liquidity. WTI crude settled above 82 yesterday. Brent settled above 86, and they're pretty much unchanged overnight. High-grade coppers continue to move higher. We traded up to 415 almost overnight. It's now around 411, but we're above that $4 level. And I've recently spoken about cocoa, and cocoa is continuing to rise. It's going to the moon. We're approaching $8,000 per ton, as you can see here. And platinum and palladium were hit hard yesterday, and they're continuing to sell off today. I'm not sure what's going on there, but I don't follow those markets very closely. We do follow platinum a bit. It's trading around 905. And back to the bond market, let's just look at what we're seeing here. Well, the 10-year yield is testing that key 433 level that I've spoken about many times. We're at 433 right now. We've been as high as 434. In Japan, the 10-year yield has actually dropped 3 basis points. So much for tight monetary policy. So there you go. Batten down your hatches. Hold on to your gold and silver. Hold on to your tangibles, because the crack-up boom is just around the corner, in my opinion. And with that, I'm going to wish you a very good day. Take care. Bye.